Good day, guys. I welcome you all to this channel. Like, this is going to be our classroom, basically. For those of you who are just seeing my video for the first time, who doesn't know who I am, I'll do a little introduction about myself, right? So my name is LPT, and I am LPT. Yeah, look at this place. I am LPT underscore Forex on all my social media platforms, on Twitter, Instagram, TikTok, Facebook, or whatever, right? So you can follow me to get more updates about my trading journey and also more content that will help you in your trading journey, right? So this is going to be the first educational video I will be producing on YouTube. And I want you guys to pay attention to this because this is going to be the beginning of a mentorship class, right? Where I would be giving free knowledge that will support you and that will help you to grow in your trading journey. So basically, I just want us to talk about a few things today and just to use this video to promote the YouTube and let more people know about it, that okay, LPT is starting a YouTube channel and is going to be sharing values, nothing but values, right? So a quick review, or let me start with, I think I will start with money transfer, and I have my reason. We are still going to talk about it basically, right? But let's just use that to start the channel because I feel like liquidity is the fuel of the market. And if you are going to do anything at all in the market or in the chart, you need to understand liquidity very, very well, right? So let's talk about money transfer basically. Where is my, okay, sorry. So money transfer. So when you hear money transfer, what actually comes to your mind? Whether you like it or not, Forex market um is a very big market, right? And what do they do in markets? They do transaction. Do you understand? Just like you going out to any market to buy and sell goods and services, it's the same thing as the forex market, buying and selling of currency pairs. Did you understand? So money transfer deals with liquidity. So when you hear money transfer, the number one thing that should come to your mind is what is liquidity. And then you will realize that sometimes you would have experienced it that market will take an order block, right? It will violate the eye of, for example, let's say a you have a bearish order block, right? You have a bearish order block. So, so you have a bearish order block, right? And you will see that when you decide to enter your trade from that bearish order block, market will do what? Market will come and violate that order block and then create another order block and what? And sell. So some of you will then be complaining that that the market actually it took you out before the market go in your direction, stuff like that. What happened there was money was transferred from that other block to another other block. That is why you always have instant mitigation. There are times that you have another block and market will go sell, then return back to that other block. But in this case, market will take a high, create a new other block, they immediately mitigate that other block and continue to sell. But then, before then, you would not actually want to participate in that new order block because you will feel like for market to validate your order block, maybe it's suggesting that market want to keep going. No, it's not like that. So I will just briefly explain types of money transfer, and I'll be explaining just few, right? So money can be transferred from other block to another other block. And before I even talk about other block, I think I should explain that the major or the meaning or definition of money transfer is that money can be transferred from one liquidity point to another liquidity point. Money can be transferred from one liquidity area to another liquidity area. And if you understand the concept of liquidity, you will know that the major types of liquidity that we have is the internal range liquidity and what? An external range liquidity. So when you say money can be transferred from one liquidity to another, it means that money can be transferred from internal range liquidity to another external range liquidity. And at the same time, money can be transferred from internal range liquidity to another internal range liquidity. So you ask yourself, what is internal range liquidity and what is external range liquidity? Basically, external range liquidity are a high or previous highs or low, which is based on your what? On your range. Do you understand? If this is the range you are considering from this particular high to this low, so anything above this high is external, and anything above it, below it is internal. So what is also external? So whatever kind of liquidity you have inside of this range is internal range, right? And internal range is not just a high. Internal range liquidity is also or let me say fair value gap, imbalances, other block are also examples of what? Of internal range liquidity. I believe that most people actually don't understand what internal range liquidity or external range liquidities are, right? They actually can't differentiate between the two. Because when you tell someone about liquidity, the only thing that comes to their head is equal highs and equal lows, highs and low. Most of you do not understand that imbalances, fair value gap, other block are also liquidity, and they are the main internal liquidity. So money can be transferred from imbalances to imbalances, that is from fair value gap to a fair value gap, or from liquidity void to another liquidity void. Money can be transferred from a high to another block. So I think I will just cover like three. I will cover from money transfer from what? From other block to other block. And I will show you money transfer from other block to other block. right? Then after that, money can also be transferred from a high to other block. So money can be transferred from high, from old highs to what? To other block. That is another scenario. Then I will also explain money transfer from what? From imbalances, that is from internal range to what? To internal range. That is, and I will pick from imbalances to imbalances. So money can be transferred from imbalances or imbalance to what? Imbalance. So imbalance to imbalance, old highs and lows to other block. The money transfer from what? Other block to what? Other block. So that when making new analysis, you can confidently say no, this particular other block, or sometimes when you would not know the other block to use, or the other blocks that will be mitigated immediately, and the other block that might not even get mitigated at all. Because why? Because money has been transferred from that other block to another one. Also imbalances. Some imbalance, you see that market open a fair value gap and will never return to that fair value gap. Do you understand? And you yourself, if you understand the concept of money transfer, you will know that this particular fair value gap market will never return back there. Definitely. Do you understand? And even if it's an imbalance, because if you feel like market must always return back to all imbalances to all fair value gap, why do you still have so many of them on your chart? If there's no chart that you want to check now, that you will not see a fair value gap or an imbalances that a market has refused to get back there to filling. Do you understand? You will find them everywhere in the chart. So easy might be that money has been transferred from those imbalances to a new imbalances. Do you understand? So market might have transferred money from one fair value gap to another fair value gap, which means that that particular fair value gap market might never get there again. So let's first treat money transfer from other block to other block, basically. So like I was explaining, when you have you will see that sometimes you will have a other block. This is a bearish order block, and you will see market. Let me paint it so that you don't get it wrong. Right? This is the bearish order block, and you will see that what will happen is that market will go above that bearish order block. So instead of the market to just do what? Give you a shallow retracement back to that other block, or market should, after market has already delivered well to a draw on liquidity, and you're expecting market to get back and mitigate the other block. And you will see that market will just go above and violate that other block. Market will just go above this other block. What's wrong with this thing? And violate the other block. So once the other block has been violated, most people will take losses, and they will I actually feel like this particular market should continue trending because the order block has been violated. But what you will notice is that the next set of candles will form another order block, which market will now later come and use. What happened here is that money has been transferred from this particular order block to this particular order block. So all you just need to do is wait for market to return back to this particular order block. Sorry. Really? Oh, I don't want to make mistake. So back to this other block, and you can do what? You can get in. Do you understand? So this is what we mean by money transferred from one other block to another other block. And obviously for you to, even from the English, from the name order block, it means what? They are orders in this particular range, in this particular zone, right? So, and what are orders? Liquidity. There are always liquidity. Obviously, there are many people who be trying to sell this particular order block. Do you understand? So there are many liquidity from here. And as a matter of fact, money can also be transferred from an order block and also from a high to one particular order block. You might have a high, market will take the high. You will still have another order block, market will take that other block too. So the money from both highs, both the old highs and the other block will be transferred to a new order block. And that is when you have a massive drop on the chart. So let me show you a few examples of that, and we'll move to the next money transfer, because I actually don't want this video to be really long. What is this? This is USD 1 hour time frame. Let me check GU. Okay, yeah. So, okay, yeah, exactly. Yeah, this example of what I just said. Look at this particular high, from this high to this high is liquidity, right? And this particular order block was supposed to what? To push market down. But what happened? Market went above it. So, which means that the money available on this particular order block has been transferred from this order block to this new order block. And the money available on this particular I too has been transferred from this I towards to this order block. So, which means this particular last buy candle will be the order block, and your trade will be here. And you can see that immediately market return back to the order block, and you can see how the market continue to move. A similar case is here. You can see market seek liquidity above this particular high. So there is actually money here, this other block. And on getting back again, market seek liquidity above this high again, meaning that money has been transferred from this particular order block, the order block that is closed, to this new order block. And immediately, market will do what? Market will give you a shallow retracement back into the order block, and you see the market drop massively. So this is an example of money transfer from a high to an order block, and also from an order block to another order block, right? So that is one example. I mean, that is two examples already on money transfer from order block to order block to order block. So money transfer from high to another high might be a long time high, right? In form of liquidity. So let's check on EU. Or EU, for example, on money transfer. I think this is another example. This is old high, obviously a level of liquidity. So when you hear high or old high or money transfer, you should know we are talking about money. Once you hear liquidity, we're talking about money. So what do you have here? You can see how market went above this high to this high, which means that money has been transferred from that high to an order block here, right? And if you look at it, the other block, the last order block here, is actually this week. If you check lower time frame, that week is going to be an order block, right? And after that, it was mitigated immediately and formed a new order block, which will be your own entry. That is the new place you have money. So money was transferred from this high to this particular high, but not just this particular high, to the other block that is available in this particular high. So from a high to a new order block. Now, this is different from when money is being transferred from other block to another order block. From that other block means that there will be an obvious order block that you will be expecting market to use, but market will violate it, right, and form a new order block, and that order block will then be the one to move the market. Do you understand? So this is another example of money transfer. It is very simple and very logical. We're going to cover like three, although there are still more. So we already explained money transfer from what? From other block to other block, and also at the same time from old highs and low to other block. The imbalances to imbalances. That, do you understand? That is fair value gap to fair value gap. Money can be transferred because they are also area of liquidity. If you mark a high, if you have a high like this, if you have a high and you consider this as a level of liquidity, and you also have a fair value gap or an imbalance, it should be also be considered as a what? As a level of liquidity. I'm still going to explain all of this. I'm going to break all of this thing down for you, right, in this channel. But for now, we are not to talk about why fair value gap or imbalances are levels of liquidity. But both of them, a high, a fair value gap, even another block, they are all level on liquidity. As a matter of fact, any reference point, any POI you can think of are levels of liquidity. Before you can think of a particular POI, definitely that particular POI is a level of liquidity, right? So we'll talk about that in the channel. I just want this to be our introductory video, right? So we are talking about money transfer from imbalances to imbalances. That is why you will see a market have a fair value gap, something like this. Market will have a fair value gap like this. And you will see that market, instead of market will return back and close that fair value gap, market will even blast through the fair value gap. And later on, you will see market forming a fair value gap close to that point if you trace it to the back, right? If you trace it to the back, you will then see that market is forming another fair value gap close to it. So in this case now, or in this scenario, you are not expecting market to still return back and mitigate this fair value gap immediately because this particular candle has covered it. And what will now happen here? Money from this particular fair value gap now will be transferred to a new fair value gap, which is this one. Do you understand? That is why you will see ICT call it inversion fair value gap. Do you understand? So if you had planned to use this fair value gap before, maybe based on your price action, it doesn't mean that this fair value gap does not work because market blasted it, right? Money can be transferred from that fair value gap to another fair value gap. So when you are looking for a trade, you can consider that fair value gap as your new point of interest to take your trade and move on. Do you understand it? So that is how money transfer from imbalances to imbalances. Money can also be transferred from candles to candles. Money can be transferred from, you might have one candle like this, and money will be transferred from that candle to another candle. But I'm still going to explain all of these things, to be honest, but let's just take it one step at a time. So looking for an example on imbalances to imbalances money transfer so that we can call it a day. So money transfer from imbalances to imbalances is what we are looking at. We are looking for now. From imbalances to what? Imbalances. Let's check GU. Let's move to 2 hours time frame or 4 hours time frame. We can see something. Okay, I think I have one on DXY. Yes. Yeah, I think this is it. This is it. This is it. I should still check another example, but I can use this to still explain. Now, if you look at this now, this fair value gap was widely open, right? So if you are looking to be bullish initially, your expectation would be the market will return back to this fair value gap, right? Seek this as was as short-term liquidity, right? And you can look for it long. But what happened? You can see what happened. So this does not mean that this fair value gap does not work. Do you understand it? So you can see what happened to the next side of that particular fair value gap. So money can easily be transferred from a fair value gap to another fair value gap. Also from candles, this particular candle was responsible for this fair value gap. So money then move from this particular fair value gap to this particular fair value gap. And at the same time, this particular candle, this is the high of the candle and the low of the candle to this particular candle. Do you understand? So if you are looking for a nice POI to enter a sell, it will be on this candle, and bringing the fair value gap inside of that candle, tracing it back to this point is a better entry techniques for you. So your limit will be inside of this, and your stop loss can be above high here, and target what? Sell side liquidity. So this is how money transferred from one candle to the other candle, or from imbalances to another imbalance. So I believe by now you should have an idea of what money transfer is, while we continue the rest in the channel, right? So I'm trying to look for another example of money transfer. I love daily time frame. Let me see on daily if we can see something to see again. Okay. Yeah, I think these are old lows. A low of liquidity. A low of what? Of liquidity. So what do you see here? What do you see here? Market. This is once you hear liquidity, what should come to your mind is money. So the money available here was transferred from this particular point, to this area and to the other block. So what happened? The last other block available here, these are like the first order block, these first two candles. But if you don't consider that, you can use this as the new order block. So the money from this low are all transferred this low to this particular range and order block. And this was the retracement back to fair value gap for your trade. So this is how money transfer actually works. So I believe I was able to explain in details, right? And if you have any question, you can ask your question in the comment section, right? And if there's anything you like me to talk about, you can also comment it on this video. So this is my first video, and I would want a maximum support from you guys. And also the next episode I'll be producing will come in well, I will talk about that later, but I want my next episode to be in series. Did you understand it? Like the mentorship aspect, and so that even if you don't have a trading model or you don't have understanding or you are not profitable, you don't know what to do and stuff like that. So I will be releasing the videos one after the other, and they are going to be well arranged, right? So they will be in order that you actually need them, not randomly. So, so until then, make sure you support me. This is my username on Instagram again, and also on Twitter and on TikTok. You can follow me. If you have any question, drop it in the comment section. So we are able to cover what money transfer from other block to other block, old highs and low to other block, imbalances to imbalances, and also money transfer from both old highs and other block to a new other block. So I'll be your teacher and I'll also be your friend. See you guys in the next video.